Have you noticed what's happening to gold prices in 2025? If you haven't, now is the time to wake up, because gold is surging at levels we haven't seen in years. Just this past year, gold has skyrocketed past $2,500 an ounce, breaking all-time highs. And if you think this is just another temporary rally, think again. With inflation running rampant, global instability, and central banks hoarding gold at record levels, this could be the beginning of something much bigger. The question is, what does this mean for you, and how can you use it to your advantage? Stick around, because by the end of this video, you'll understand exactly why gold is exploding in value, what's driving this surge, and how you can position your portfolio to protect your wealth before it's too late. Welcome to Golden Years Capital, where we break down complex financial topics so you can make smarter investment decisions. If you're worried about inflation, the state of the economy, or the risk of your retirement savings losing value, you're in the right place. By the end of this video, you'll know exactly why gold prices are surging, whether it's still a good time to buy, and how you can take advantage of this trend before it's too late. Gold prices have been rising rapidly in 2025, and the numbers don't lie. Inflation, which was at 3.5% in mid-2024, has surged to 5.2% as of early 2025, according to the latest U.S. Bureau of Labor Statistics reports. Meanwhile, the cost of everyday essentials like housing, healthcare, and energy has jumped nearly 7% in just the past year, squeezing household budgets and eroding the purchasing power of the dollar. At the same time, stock market volatility has reached new highs, with the S&P 500 experiencing multiple corrections of over 10% in just the last 6 months. Uncertainty is at an all-time high, and investors are looking for safety. That's where gold comes in. Central banks around the world have also been on a historic gold buying spree. In 2023 alone, central banks bought over 1,000 tons of gold, the highest amount in decades, and that trend hasn't slowed down. In the first quarter of 2024, central banks added another 290 tons to their reserves, signaling a clear shift away from traditional fiat currencies. When governments and financial institutions are hoarding gold at these levels, they're sending a strong message. Gold is becoming the ultimate hedge against uncertainty. A key reason gold is soaring is the weakening of the US dollar. Over the past 2 years, the Federal Reserve has struggled to balance interest rates, inflation, and economic growth. Despite multiple rate hikes, inflation remains stubbornly high, and the dollar is losing its purchasing power at an alarming rate. Historically, when the dollar declines, gold prices rise. This inverse relationship is one of the main reasons why investors are shifting their wealth into gold to preserve its value. Another crucial factor driving gold prices higher in 2025 is the unprecedented level of government debt. As of early 2025, U.S. national debt has soared past $35 trillion, fueled by aggressive government spending and stimulus measures intended to counteract economic slowdowns. This debt crisis has created widespread fears about the long-term sustainability of the dollar and the potential for future tax hikes or even debt defaults. Historically, when government debt reaches unsustainable levels, investors flee to gold as a way to protect their wealth from potential financial fallout. The situation is further compounded by rising interest payments on this debt, which now exceed $1 trillion annually, putting immense pressure on the Federal Reserve's ability to manage inflation without triggering a financial crisis. International investors have also taken note, with major economies like China and Russia actively reducing their reliance on the US dollar and increasing their gold reserves as a hedge against currency devaluation. The declining confidence in fiat currencies, coupled with concerns over excessive government spending, is making gold more attractive than ever. If the debt crisis continues to spiral, many analysts predict we could see gold push well beyond $3,500 an ounce in the next 12 to 18 months. Smart investors are recognizing this trend early and moving their assets into gold before the broader market catches on. The writing is on the wall. Gold is being revalued as the ultimate safe haven asset in an era of fiscal uncertainty, and those who act now could position themselves ahead of the curve. Another factor that cannot be ignored is the dramatic increase in demand from institutional investors. Hedge funds, pension funds, and wealth management firms are now adding gold to their portfolios at an unprecedented rate. According to Bloomberg, gold-backed exchange-traded funds, or ETFs, saw inflows of over $12 billion in the first quarter of 2025 alone, marking a 60% increase from the same period last year. This surge is being driven by concerns about stock market volatility, rising government debt, and fears of stagflation, an economic scenario where high inflation coincides with slow growth. When institutions move money into gold at this scale, it pushes prices higher and creates a feedback loop of increasing demand. In addition, high net worth individuals and family offices are also joining the gold rush, shifting assets away from cash and equities into hard assets like gold to preserve their wealth. Historically, when institutional demand for gold spikes, prices tend to trend higher for extended periods. This was seen in the late 1970s when gold prices surged over 500% due to a combination of inflation, geopolitical crises, and financial uncertainty. With today's economic conditions mirroring that period, some analysts believe we could see a repeat of that historic bull run. If you've been on the fence about investing in gold, these trends should serve as a major wake-up call. The more institutional investors pile into gold, the less supply is available for everyday investors, making it crucial to act before prices climb even higher. But another factor fueling gold's rapid rise is geopolitical instability, which has created a perfect storm for safe haven assets. Across the world, economic tensions are rising with global conflicts, trade disputes, and currency devaluations adding fuel to the fire. The US-China trade war has escalated once again, affecting supply chains and increasing uncertainty in financial markets. Meanwhile, oil prices have surged due to ongoing conflicts in Eastern Europe and the Middle East, further increasing inflationary pressures. As a result, nations that were once hesitant about relying on gold are now doubling down, using it as a hedge against economic and political turmoil. Even tech-heavy economies like Japan and South Korea, which traditionally favored cash reserves and government bonds, have started increasing their gold holdings. This global shift indicates that gold is no longer just an asset for the ultra-cautious investor. It's becoming an essential store of value for anyone who wants to safeguard their wealth in a rapidly changing world. If this trend continues, experts believe that gold could see a sustained rally well beyond the $3,000 per ounce mark in the coming months. The more uncertain the world becomes, the more demand for gold will rise, and those who act early will be in the best position to capitalize on its upward trajectory. Another major driver of gold's meteoric rise is the fear of recession. Many economists believe we're either on the verge of a significant economic downturn or already in the early stages of one. Rising corporate layoffs, slowing GDP growth, and declining consumer spending all point toward potential economic turbulence ahead. During recessions, investors flee to gold as a safe haven. In past crises, like the 2008 financial crash and the COVID-19 market collapse, gold saw massive gains while stock markets plummeted. If history is any indication, the surge we're seeing in 2025 could be just the beginning of an even bigger run. Gold isn't just an investment, it's financial insurance. That's why legendary investors like Ray Dalio have consistently advocated for owning gold. In fact, Dalio has famously said, "If you don't own gold, you know neither history nor economics." That statement is more relevant today than ever before. When uncertainty reigns, gold isn't just an option, it's a necessity. So what does all of this mean for your portfolio? If you're still relying solely on stocks and bonds to safeguard your wealth, you could be exposing yourself to unnecessary risk. The average 401k and IRA are heavily weighted in traditional financial assets that are vulnerable to inflation and market downturns. A gold IRA, on the other hand, allows you to hold physical gold in a tax-advantaged retirement account, providing both diversification and protection. A gold IRA lets you invest in tangible IRS-approved gold such as American Eagle coins, Canadian maple leafs, and certified gold bars. Unlike paper assets, which can lose value overnight, gold has historically retained its purchasing power through every major financial crisis. If central banks are pouring billions into gold, it might be time for you to consider doing the same. That's why I highly recommend getting a free gold IRA guide. I found a company that helps everyday investors add physical gold to their retirement accounts with secure IRS-approved storage. They offer a step-by-step guide that walks you through everything you need to know, from selecting the right gold products to executing a tax-free rollover from your 401k or IRA. If you want to secure your wealth before the next financial crisis hits, click the link in the description and claim your free gold IRA guide now. Don't wait. Every day that passes, gold prices continue to rise and the window of opportunity gets smaller. Take action today and protect your future.